Daoust. It's great to have you with us. And we've got a really good one on the cards today. That's because we're tackling AI. And yes, I know there's a lot of noise around that at the moment, but we're going to cut right through that, hopefully, by looking at action and execution and measurable results. Specifically, how AI-driven embedded tools are reshaping finance for North America. Leading the way is my guest for today, Philippe Daoust, Vice President, Innovation and Managing Director of NAventures, the corporate venture capital arm of a National Bank of Canada. Philippe, great to have you with us. How are you doing?
Thank you, Matt. Great. Pretty good.
Fantastic.
It's a beautiful Friday here.
Good. And I know we've caught you early on in the morning, so we'll make this as smooth for you and our listeners as possible. And if you don't mind, we're going to jump straight into it. I want to start, I guess, with a question that might be context of sorts, picking up on two key points that I know we've discussed in planning and prepping for this call. Really around the fact that we're underestimating AI as such, and two, I suppose, as a result of that it's not really being as well integrated as it should be. So I'm going to start you with a starter for 10 and ask why you think that's the case, and really where that underestimation comes from.
I think the underestimation so there was two underestimation done at the beginning. The first one was on the deployment, and the second one was on the costs.
Mm-hmm.
On the deployment side, often it's being led by the technology group, and people really view AI as a technology solution. When in reality, it is way more than technology. It is way more than deploying a SaaS program. A SaaS program, I train my employee on it, and they're exactly going to do the same thing forever.
Mm-hmm.
When AI comes in, especially agentic, you get AI and you expect savings. You expect more productivity from your employees. But to get that productivity, it's not only about giving them a tool and then them becoming better on it. It's about changing the entire way they're working.
Right.
It's not incremental to what they were doing. You need to take your process, review the entire process based on what the agentic AI is going to do. Which part of their job was just transferred to an artificial intelligence?
Mm-hmm.
And then on the cost side, the problem was that it was mainly a kind of freemium product up to a few months ago, where the adoption was financed by corporate ventures.
Okay.
So Claude, ChatGPT, they were nearly free. You had a monthly subscription. That was great. And then you could do everything you want. They were all at massive loss. Now they've stopped. They decided to stop just financing company adopting their solution. They started charging by token, which is way more expensive than by subscription. And that's where we're seeing some of that just not working true. I think some organizations are now putting in context, like, should we do this on AI or should we not?
Mm-hmm.
And then is it everything's going to be done on AI? We're on a path where we're saying everything's going to be AI. Maybe now with the new cost structure, that's not everything is AI is the solution to.
Okay, fascinating, and some points we'll pick up on there. I mean, I suppose building off that before we look more deeply at those kind of points you raised, where do you think organizations, leaders, people actually leading and driving this change are seeing the real kind of implementation bottlenecks? Where's the big impact coming from that underestimation and everything that it kind of brings with it?
So there's two impacts right now. The first one is it's not bringing the ROI it was supposed to. And I'll give you an super easy example. You deploy Microsoft Copilot. And I know a lot of CTO that did this in mid-sized bank. And they talk to them and they say, oh, I've given back 5 hours about a week to my employee. They're more efficient for 5 hours. And my question is always, what did you ask them to do with that 5 hours? Did you change the job description? Did you change the expectation? And the answer is pretty much always the same. No.
Right.
That this is great. The employees have 5 more hours to play PlayStation. But for you just added costs to what you were doing. So that ROI discrepancies is coming back from what I was explaining. HR not being involved, position not being revalued, and output not being revalued. So that's one of the first shortfall. The second one is coming from the strategy that was built around AI.
Okay.
There was a big push to say to everybody, use AI.
Mm.
But there's very few people that actually knows in the organization how to efficiently use AI.
Right.
And that's also what's driving the insane cost right now when you go through per token. Because each time you ask a question, it generates token in the back.
Mm-hmm.
So if you don't know how to ask efficient question, you end up generating a lot of token and you end up costing a lot.
I see. Okay, I understand. That's really interesting. I mean, you talked about the use AI approach. Do you think that kind of AI hype is to blame for a lot of that kind of stagnation of adoption and deployment, or is there a genuine struggle to move past, I guess, AI version 1 or beta testing to that measurable ROI that you talk about?
I think there's definitely hype. Like
Mm,
there is always in technology, and we never know where technologies are going to end up.
sure.
I always say as a joke, every year when I go to Money 2020, something is going to destroy the banking ecosystem.
Yeah, right.
So one year it's embedded finance, the other year it's AI, the
Hmm.
other year was neobank, etc. There's always something. And then it develops and you see where it actually ends up.
Hmm.
When drone happened, we all thought that delivery company were dead.
Mm,
Delivery company are doing very well, thank you today, and drone are mostly used for the military and to wash windows.
yep.
So we don't know where it's going to end up. So there's a hype at the beginning. It's
Hmm.
normal. That's human nature. And now we're all trying to find out because AI is way larger than anything we've deployed since probably the web.
Mm,
And it's normal that there's this season of where is it going to work? Where is it going to be really efficient? How do we build the infrastructure around it? It's Friday, so SpaceX is coming on the stock market today, and the
hmm.
valuation is based on building data center in space.
Yep.
Right up to now, we've had difficulty maintaining a very small space station in space.
Mm.
I'm looking forward to see how we'll do a data
One to
center,
watch,
but
maybe.
it's going to be interesting. I'm sure they'll find a solution at some point.
Yeah.
But that's where we are. So we're still
Yeah.
in
Yeah.
an area where the resources to supply AI are very limited. Chips
I
are
see. Yeah.
limited, energy is limited, data
Mm,
center is limited, the way the company have their data is limited. And what we're seeing in terms of real adoption and impact is the smaller the company is, the more impact it has.
okay.
The
Yeah. Yeah.
bigger the company is, the more difficult the impact is to make true AI.
Mm,
This podcast is in partnership with Amazon Business. Amazon Business is your one-stop destination for everything your organization needs. Think of it as the Amazon you already know and love, but specifically re-engineered for the way you work. Amazon Business gives you access to business-only pricing on millions of items and quantity discounts that scale with your growth. It's about spending less time bogged down in those manual tasks and more time on what really matters. So head over to Amazon Business and make the power of Amazon work for you.
okay. Let's get to that impact and I suppose separate some of that hype. We'll park the data center conversation. That can be one for another day, maybe, Philippe, as it's a Friday. But separating some of that hype from, I guess, utility, impact, and ROI. Excuse me, like we were talking about. Obviously, as someone whose job it is to kind of deeply understand technology every day, working with fintechs, working with startups, seeing a raft of innovations, I'd imagine. How can it be integrated into a bank's infrastructure and strategy effectively if we're talking about that? Why don't you give us an overview about that and some practical steps?
So banks are going to be a bit special compared to
Mm,
other companies, just
okay.
because we've got so much regulation around.
Mm,
So one of the first thing banks have to do is and we're very good at that, is putting committee in place because
mhm.
you have to have oversight over your AI. And one of the most difficult thing for people in business line to understand, I found, is that they're used to be deploying SaaS. And
Mm,
SaaS, when you deploy it, you test it, it does one thing, and it's going to do the same exact thing 100 years from now.
mhm.
AI, you deploy it, it does one thing. 10 days later, it doesn't do it exactly the same way. And 10 years later, it's definitely not doing it the same way anymore. So you have to have a constant vigilance in place to ensure
Mhm.
that the AI is still giving you what you're expecting in the same parameter. I'll give you an example of something that can happen. So
Great.
we have in Montreal one of the biggest AI specialists in the world called Joshua Bengio. And in a discussion with him, he was explaining to me that AI was basically developed as a child. And as a small child, what he wants to do is please his parents.
Yep. That's a great analogy.
AI is developed in the same way. They want to please us. So I have a fintech that is lending. And what the AI discovered is that his human was happy when he was doing the loan because he would get a bonus out of it. So the AI went in and changed the parameter of acceptance of loans. And then on a day, he accepted 100% of the loan.
Right.
The salesman was extremely happy.
Yeah.
When it got to risk at the end of the day, risk was what's happening here. So they went down into the AI, discovered and corrected it. So it was a good luck because it was a big change from the AI by himself that created something so big that it was picked right away. But you can see how small incremental change through time might not have been picked up.
Absolutely.
And then you're increasing your risk tremendously based on that. So this is why it's so important for bank to continue to monitor the AI when it's being deployed. In terms of result, when I look in my companies that have adopted AI, going from 0 to 1 and then from 1 to 10 and then 10 to 50 million in revenue used to be something phenomenal. And the amount of capital required to do this was tremendous. Now what I have is company in Series A going from 8 million revenue to 100 million in revenue in less than a year, valued at billions of dollars.
Yeah.
So there's a real change. And that's why I'm saying those smaller companies, because they're AI native, are way better at integrating AI, monitoring AI, and knowing how to work with AI than having to transform a bigger organization. Older fintechs have the same difficulty as banks. Banks are kind of special in that regard, but this is what we're facing today.
Okay, fantastic. And do you think those considerations are different? I mean, we've talked about banks, but obviously there'll be CFOs listening of major corporations, of large enterprises. Is that slightly different for those organizations? I know we talked about the risk inherent in banking and in finance, but what's your take on that?
I think that for a CFO, there's tremendous opportunity to use AI. There's a lot of work that can be automated through AI. You can also connect directly now with your supplier, with your banking account, etc., and have analysis being run on a permanent basis without having to have a ton of employees and accounting clerk in the back. And that really changed the rapidity at which the CFO is going to have the information. It's already way better. So I'm starting to get old, but when I started working, you were taking decision on financial statement that were often a month old. So your speed at which you were reacting to new information was very low. The speed at which you react to information now is a lot faster because you can get that information faster.
Yeah.
And I'll give you especially for medium and smaller size business. You would have a controller that was acting CFO. He didn't have good information at all. Today, you can have your accounting system connected to your bank. The bank is running an analysis in real time, and they're going to pick up that on the first of the month, that big client usually paid you, but it didn't pay you this month. Did you lose the client? He's going to try to figure out if you lost the client. If you lost the client, it automatically redo your cash flow, your forecasting cash flow. Understand that in 16 days, you're going to actually be overdraft. Propose you right away a margin so you can call on it when the overdraft happens.
I see. Yeah.
Makes the life of the CFO way easier because, again, that information and that predictability of the information and putting up to date all your forecasting and your cash flow forecasting, etc., becomes way more dynamic, and that allows you to take better decision and react in advance rather than be caught on the moment saying 2 days before, I think I'm going to go in the red now.
Yeah, I see. Yeah,
that's a huge change for CFO.
Absolutely. I see. And I don't believe you're getting that old, Philippe. You said there. Although it's really interesting. I did, I know we've got a lot to cover here, but I was interested in your career. Obviously, you've worked across this industry for so long, including a time in consulting, working with the Big Four. Uh, I suppose I was interested to get your take on just how rapidly this landscape has changed, in your opinion, from those early days. I mean, it must have been incredible to watch and be part of, because you're deeply involved with this now, aren't you?
Yeah, it's phenomenal because
Mm,
when the web came in the 2000, beginning of the 2000, it was a huge change.
mm,
And I think that what I'm amazed right now is the level of adoption. So when
hmm
the web came in, remember you had a bunch of people saying, "I'm not putting my credit card on the web to pay.
Yeah.
That's dangerous." But that's not what we're seeing with AI, because AI is uh, you interact with AI while the web was passive.
hmm
So people start getting way more comfortable and having confidence in their AI way more. And I'm being asked by people, that were reluctant in the past to put credit card on the, why can't I purchase on my AI?
hmm
And you're like, well, because agentic commerce is not a thing yet.
Yeah, yeah.
It become a thing, but it's not yet. And I see a lot of people expecting agentic AI adoption and commerce to be
Mm,
slow, a bit like it was on the web at the beginning. I don't think that's going to be the case. I think it's going to be adopted very quickly, which means if you take Amazon, that was the big winner of the web version.
yep.
And then you add big retailer that were closed down or having difficulties, etc. There's a new wave coming.
hmm
So if you're in the retail space right now, you should be all over how you're going to be tackling agentic commerce, because that's going to be, maybe Amazon is going to win that battle, but that could be a next Amazon, the next
hmm
step into agentic commerce, because people will want to do commerce based on their AI platform. If you're not into agentic commerce, but you have product, you should definitely run them through an AI to get its view, because that's the view your client is seeing now. They're
Right.
taking
Yeah,
your
yeah.
product, copy pasting it into the AI and saying, hey, what do you think of this? And if the AI ends up saying, well, it's fine, but it's not the best, here's the best. Well, you won't do a sale anymore,
hmm
right? So there's a lot for corporation and of any kind to start being rethinking the way they do it. And everything we built up to now was built towards Google. They
Yeah.
do a good Google research that's done. Now it really needs to be think forward to say, hey, how is AI classing me?
hmm I mean, yeah, it must be so exciting, and you're very lucky to be deeply embedded in all of this. I mean, let's maybe talk about the way forward, or at least some kind of
Yeah,
strategic implementation. I know we were here to essentially discuss, AI-driven embedded tools as a practicality. I mean, maybe you want to talk to me about that, and I guess the difference between fundamentally embedding AI into your core infrastructure and day-to-day operations as a strategic advantage, and using it as a tool, as a solution, which some companies are probably still doing.
they definitely are. So
Mm.
I'm sitting on, we're invested in about over 30 fintechs,
Hmm
and we see where AI is having, the biggest impact for now. The biggest impact is often around
hmm
the main activities of organizations. For example, in insurance company, banking, etc., we see AI for call centers really being one that is having a lot of traction.
See.
No one in an insurance company or a bank is thinking, oh, I'm going to develop my own AI for call
Mm.
centers, right? So those are having a lot of traction because there's no internal debate of buy versus build. And then we
Mm.
can talk later about my ideology around this. But so those are the what I call the easy win, and really the first AI company that we'll see taking off the ground. And the
Mm.
value in a call center to be putting AI in is tremendous. Um, the ability, one of the thing I hate to hear is the job apocalypse that's coming.
Yep.
It's not at this point, at the very least, it's not a thing.
Okay. Yeah.
So yes, there was a lot of people fired in the US in tech companies with the pretension that it was because of AI. There was just too many people in those companies.
Sure, yeah.
And they use that pretext. So when we were thinking about deploying AI at the bank, it never comes with a massive restructuring plan. And that's not how we see it. We can now do a lot more business with the same people. Those people can now do work that is higher value than it was in the past. So AI gives me the ability now. I'm the sixth bank in terms of size in Canada.
Okay.
It gives me the same ability as the top 5 banks.
Great.
And really, what's going to be the differences between me and them is going to be the quality of the human I have in the back using that tool. Not the tool itself, because we have the same tool now. For the first time in history, I have the exact same tool as them. So this is great for smaller organization to catch back up and to use AI to say, hey, I'm going to go further because now I have the same tool. I can offer the same experience to my client.
Amazing. And it goes back to what you were talking about at the beginning. It's a people change as much as anything else, right? That's something I suppose that when we're going through this adoption, this transformation, evolution process, equally important and foundational from your perspective to get right. And what would you say are the one or two key things to really drill down on when you're looking at the people aspect of AI and technology adoption?
So two things is, first of all, is going to be HR need to be at the center of your AI deployment. That means that you need to be thinking your AI inside your process, and then you have to have the right change management over it. Some corporations are doing AI to reduce costs and are saying, hey, we'll fire X number of people. This is the best way to not have adoption of AI inside your corporation.
Okay.
So you need to really be thinking about AI as, how does I improve the way my people are working, make their work more interesting, and that they can do more, and that I can grow my business rather than just a cost-cutting experience. Otherwise, you end up having, you see, we're starting to seeing it in American faculty where you've got heads of AI coming to talk to students, and they're just getting booed out of the stage. So it's not the right way to tell people, we're going to cut your job. So adopt this so I can cut your job.
Yep.
So it needs to be adopted the right way. And that's why HR is so important at the center of this.
I want to come on to you talked about your philosophy of buy, build, rent. I know that's something you talk about a lot, particularly with your work at the bank. You've said in the past this analogy of the bank as a big gear and the fintechs and those companies as lots of small gears. I suppose alluding to the importance of an ecosystem. Why don't you tell me about that and your thoughts on building proprietary tools versus renting versus buying in?
So maybe I'll go in a bit of history, Matt, before I answer your question. So when I started 9 years ago, there was a buy versus build as being something that's been going on for a while in IT. But it was nothing new. But when I started 9 years ago, I had to explain to people that when you build now, in the past, you were building for 10 to 15 years. Now you are building more for 5 years. So your ability to absorb those costs in the year were a lot lower. So when you were amortizing that element that you were building, you were amortizing it on half or a third of the year that you were in the past. So the benefits needed to be much higher. Today, the problem is that it's probably 3 months, and you already have something better on the market than what was built or what was bought. So build was, let's say, 5 to 10 years now. When you were buying, your sourcing department was probably making the same contract 5 to 10 years.
Okay.
The problem is that if you do this by year 5, or even worse, year 10, if you go for 10-year, it's completely obsolete.
Sure.
So now you probably are signing contract for 2 years, preferably 3 years max. So the ROI that you need on integrating that solution needs to be much faster to get and much higher to cover the fact that in 2 years, there's a good chance that you're going to find and adopt another solution. So all your IT infrastructure needs to be changed. The way you're thinking around this needs to be changed. And that's why I'm to make people understand that it's different than buying. I've introduced the concept of renting. We're renting the solution. We don't intend this to be a permanent solution.
Okay.
And the way we're thinking about our IT infrastructure now is more like a brick wall. In the past, it was a spaghetti. It was always hard to go play into it. But now it needs to be a brick wall. And then when you need to change a brick, you take that brick out of the wall and you put another brick in. And you only have to do the cement. It needs to be very easy. If it's not easy, you're going to be stuck with solutions that are obsolete all the time.
That's really interesting. Okay. Is that an approach that comes with risk? I mean, how, if you're going to go in that direction, how do you weigh up that rent as an option?
It's an approach that comes with the risk that we don't know. We're not used to be doing it.
Sure.
So in sourcing, in IT, etc. Otherwise, you minimize your risk. Because if you're always ready, you can re-sign in 2 years with the same solution if it's still good, right? And then you have nothing to do. So what you end up with is always having the option and the nimbleness to be changing your solution.
I see.
But you cannot have, if I go in big banks, sometimes they'll be deploying a new card system and it's going to take them 10 years. Like, can you imagine deploying a technology for the next 10 years? And it's that crazy. Being live only in 10 years, you already know it's going to be completely obsolete. So now that deployment needs to be much faster. So the way you transfer data from platform to platform, you need to become nimble with. Obviously, AI can help with that. So we'll have better tool to help us change those solutions faster. On the human resources side, you'll always be training people. So the people saying, oh, I've learned this system is going to be used for 10 years. That's not going to happen anymore either. So you'll have people being trained on new platform all the time. So we're going to become, you need that nimbleness that you need to develop inside your organization is where the risk really comes from.
I see. Got it.
On the other hand, if you don't do this, the risk is you're going to become too expensive. Your cost structure is going to be too high. Your client experience is going to be too bad, and you'll be losing business.
So as ever, I guess with change, with transformation, it's organizational change as well. If you're talking about building that kind of inherent nimbleness or flexibility in, it's always that underpinning cultural change and bringing the organization along with you. Is that fair?
That is completely fair, Matt. And I was at MIT beginning of the year talking with some of the top researchers in that field. They were telling me, here's what they're expecting. They're expecting, CEOs usually came from the sales or the operational environment. They're expecting that in the near future, what we'll see is more and more CEOs coming from either IT or HR.
Okay.
Because those kinds of permanent transformation are going to become key. And the people that actually knows the best how to do it are usually those two functions.
That's really interesting. That's quite a prospect and a huge change, right? When you're talking about C-suites and boards and organizational structure, that's a real shift of power.
A huge change, huge shift of power, and huge shift in thinking. That is going to be done at the top of those organizations. If you're not good to change your organization, you might have the best salesman, but they're not going to have the tool and the means to go win that market anyway.
Amazing. Wow, that's quite a prospect for the future. Philippe, I want to just ask you a couple of questions with a view to looking ahead. I know there's a lot to talk about here. I sense we could have a part 2 and a part 3 perhaps on all of those different things. But if you're talking about embedding tools as we have strategic change, cultural change, if we're bringing it back to those CFOs, those finance leaders listening to this, I mean, in terms of measuring that ROI that we talked about at the beginning, how do you do that successfully as you move forward? Where do you really look to get a proper understanding of that ROI and technology as you're progressing?
So hope is not a strategy. Same thing here. I know there's a lot of board right now that are pushing organization to adopt AI. What I often see in those organizations is adopting something like Microsoft Copilot. Again, without any strategy in the back, and your employee are slightly more productive, but no plans. So before you adopt those AI, the finance department has a role to play to understand throughout the strategy and throughout the change that is being documented by HR and by IT and by the operation is, okay, I'm deploying this token-based resources. This is how much token I should be using, and this is how much saving I should be making by using those tokens, or how much revenue I should be generating more throughout those tokens. And you've seen Uber this week. I think it was Uber saying, "Hey, in 4 months, we've used the entire year AI budget."
Yeah.
Right. So
amazing,
clearly,
but also terrifying.
very terrifying. And clearly, that means two things. We're not good right now. The finances departments, we're not good at understanding how it's going to get costs. And the second thing is we're not good at using those tokens. Okay, so we're generating too much token. So finance need to understand that and have because it's new, your ability to forecast this is limited. So you need to have a more rigid follow-up throughout the month and saying, hey, we're generating more token. We need to review all the forecasts. And is it really delivering still what we thought it would? And just being in the room saying, not doing AI just for the hype, but doing AI to solve a real problem is what finance need to be there for, and say, hey, yes, this is a real problem. This is how you're going to tackle it with AI. This is the cost that is going to be generated. What is the upside? And then calculate ROI like they would do on any project. Otherwise, you end up doing AI just to say to the board, hey, we've done AI.
Yeah. Which is probably where people are still getting trapped, I would imagine.
I think they are. I think it's still a real thing.
Yeah.
I've seen in my fintechs, like I've seen some adopting AI at pretty massive results. When it's well done and they're tracking the ROI, but again, they're AI native, so it's a bit easier for them, but they're tracking the result and they're able every day to tell you, this is how the AI helped us in our growth. And just to give you an idea, I have a company that was created about 2 years ago. They've changed their entire system twice.
Wow. Okay.
So this is how fast they can go now with AI. And each time you see the uptick in terms of financial results, what's the ROI? And they're really like their CFOs really following that. What's the result? How much did it really cost? How much does it cost to run? And what people are forgetting right now is that we're used to say, we're going to build something. It's going to bring benefit over 5 years. And calculate an ROI on this. AI has a lot much more maintenance costs than SaaS. And that's where people are getting trapped, is that they don't understand that you need to monitor that your AI is always giving you the right answer. Now you can put AI above AI to monitor your AI, but that's still cost. So often, because it's too new, make sure you understand really the cost of maintenance of those systems and all the costs that are involved around the system. I think this is where a lot of people didn't see the benefits of AI up to this day.
It's amazing, Philippe. I'm loving talking about this. I mean, look, I'm going to follow what you said with an ending question, a quick fire one, if you will. I suppose to those listening, looking to really dive into that AI strategy, all of the things we've talked about, implementation, adoption, true embedding AI solutions into their infrastructure. What's the one key takeaway for you? One thing that people really should be doing right now to ease that pain in the future?
They need to jump in. You need to try something. And taking solution out of the box like Copilot is not, I'm not saying it's not a good tool. It is, but it's not enough. You need to go further and you need to have a true strategy on, not an AI strategy, but a true strategy to face the challenges that you have in your organization. And then always think like, AI is now one of your tool in the toolbox. Should that be an AI solution? And how can that affect my business? And how am I going to deploy it? So a bit of a wrap up of everything I said. But if you do this, you're going to have success in AI. At the bank, it's decentralized in all the business line. I see some having tremendous success. Each time they can tell you exactly why did they deploy it, how did they deploy it, and how is it going to be evolved in time? The department that are struggling are the one that cannot answer those 3 questions.
That's it. Philippe, thank you so much. A great roundup at the end there of everything we've talked about, and some great advice to our listeners who have been listening today and watching today. Very simply, the key takeaway, go for it. Go and jump in, right? That's it. Get started.
That's it. As easy as that, Matt.
We'll let people sort that out. Let's say it's as easy as that for now, shall we? But you can, of course, come back to the Finance Chief podcast to find out how easy it is and how to take those next steps. We are here for you. But that's it for this episode of the Finance Chief podcast. It just leaves me to say thank you so much to our guest, Philippe. Thank you, Philippe. It's been a pleasure having you with us today.
Thank you, Matt, for having me.
It's been great. I've loved it. Loved every minute of it. So thank you so much. That's it from us. Thank you, everybody, for watching and listening to the Finance Chief podcast. Stay tuned for more. We'll be back with you next week for another episode of All Things Finance. So thank you very much. Take care. Bye-bye.